In the ever-evolving landscape of the financial market, sell-offs and corrections are routine occurrences that often raise alarms among investors. Recently, Tom Lee, a well-respected Wall Street analyst from Fundstrat Global, shared his insights in an interview on CNBC, insisting that the recent market sell-off was an overreaction. His perspective highlights a crucial point. While the market is volatile, it also presents exceptional opportunities for savvy investors, especially in the technology sector. This essay delves into Lee's analysis, exploring the implications of market corrections and spotlighting 3 tech stocks that could offer significant returns for those willing to buy the dip. Market corrections are often precipitated by a variety of events, from economic indicators and monetary policy shifts to geopolitical tensions and corporate earnings reports. Recently, many investors experienced a wave of anxiety when the market collectively reacted to news about tariffs and economic forecasts. Companies like Tesla saw drastic drops in their valuations, not because their fundamentals weakened, but due to an overarching sentiment of fear that overtook the market. Lee argues that this collective selling was an indiscriminate reaction, not reflective of the actual value of these companies. In fact, he suggests that significant stocks in the technology sector are selling at discounts that are absolute steals. For investors, viewing market corrections through a more analytical lens can unlock potential opportunities for wealth accumulation. As fear drives prices down, diligent investors who remain grounded in fundamental analysis can find real value. One of the interesting points raised by Lee during his interview is the contrast between equities and bonds during this time of correction. While the stock market experienced a severe sell-off, largely characterized by panic and liquidation, the bond market did not react in the same way. This divergence suggests differing outlooks on growth and risk among these markets. The stock market's reaction implies a heightened sensitivity to tariff implications and economic slowdown fears, resulting in widespread reductions in equity valuations. Conversely, the bond market shows a more tempered view. According to Lee's analysis, the bond market seems to be pricing in a Fed put, suggesting that if growth were to falter significantly, the Federal Reserve could intervene with rate cuts. This difference in sentiment between the two markets creates an interesting investment landscape. Given this backdrop, Lee encourages investors to refocus their attention on tech stocks that have been oversold. In the tech sector, he identifies 3 types of companies that represent an excellent buying opportunity for investors. A leader in innovation tech companies that prioritize innovation often find themselves transcending market cycles. These companies cultivate a culture that not only responds to current market demands, but anticipates future needs. For investors, a company that continually innovates demonstrates resilience and the ability to capture market share, promising long-term growth. A pioneer in data connectivity. As the world becomes increasingly interconnected, companies focused on seamless data transfers and communication technologies are crucial. The acceleration of remote work and digital communication tools highlights the importance of reliable and fast connectivity solutions. Investing in these pioneers can mean capitalizing on trends that are expected to grow exponentially. E-commerce has fundamentally reshaped consumer behavior over the last decade. The pandemic only accelerated this shift, making it clear that companies in this space are not merely a trend but a new standard. Investing in e-commerce giants could provide investors with substantial rewards, especially as these companies expand into new markets and verticals. Lee's emphasis on these companies indicates a belief that they will not only withstand current market turbulence, but emerge even stronger, further solidifying their leadership positions. If you find this analysis valuable, please hit the like button and subscribe for more insights on investing trends and technology stocks that could shape your financial future. Your support helps us reach more individuals who want to navigate these complexities effectively. In discussing market behaviors, Lee brings to light the phenomenon of rage selling. This term refers to the impulse-driven selling that can arise during moments of heightened anxiety or uncertainty. With modern technology facilitating instantaneous transactions, fear can lead to rapid sell-offs, regardless of the fundamentals behind the companies. Lee notes that institutional investors often exhibit similar behaviors, with entire funds deciding to go flat at the push of a button. This creates a market that is not just volatile but wildly reactive and often irrational. The technological capabilities that allow for quick trading can amplify mispricings and lead to what Lee describes as whipsaw effects, where market movements are not based on real value but rather collective sentiment. For long-term investors, understanding the significance of buying the dip is critical. Market corrections, while intimidating, often create opportunities to acquire high-quality assets at lower prices. Market corrections, while intimidating, often create opportunities to acquire high-quality assets at lower prices. Lee's vision of a once-in-a-decade opportunity in the tech sector suggests that the current state of affairs may ultimately lead to significant future returns for those who choose to invest wisely. The adage to buy low, sell high is more than just a catchphrase. It is a strategy that demands patience and foresight. When the market dips, quality companies with sound business models often experience unjustified price drops. While fundamental analysis is vital, it is also essential to understand the interplay of market sentiment. The current situation illustrates how macroeconomic factors can lead to an emotional response among investors. This fear can create barriers that prompt individuals to overlook potential opportunities. As Lee indicates, being overly reactive to headlines can hinder investment success. In challenging times, it is essential for investors to maintain perspective. Markets operate on cycles, and corrections, while formidable, are not windows into the future. Markets operate on cycles, and corrections, while formidable, are not windows into the future. Investors must distinguish between temporary setbacks and long-term potential when considering their strategies. Tom Lee's insights during the CNBC interview underscore a vital understanding of market dynamics during periods of correction. His argument that recent sell-offs are reactions rather than reflections of underlying value serves as a reminder to investors. Patience, analysis, and a forward-looking mindset can be powerful tools for navigating market volatility. As the tech sector presents itself as a battleground for oversold stocks, opportunities beckon for those willing to act. Companies that lead in innovation, data connectivity, and e-commerce represent not just a chance to recover losses, but to gain substantially from investments made now, even in the face of fear and uncertainty. By strategically capitalizing on these moments of market correction, investors can position themselves favorably for life-changing returns in the long run. As you navigate the complexities of investing, remember to subscribe for updates on market trends, stock analyses, and insights that could shape your investment strategies. If you found this article informative, please like, share, and subscribe to help others discover the essential information needed to thrive in today's turbulent market landscape. Investing is not simply a transactional process, it is an art that combines analysis, sentiment, and foresight. As investors keep Tom Lee's insights in mind and look towards tapping into the resilience of tech stocks, they can remain informed participants in what could indeed prove to be a pivotal moment for wealth creation. As investors keep Tom Lee's insights in mind and look towards tapping into the resilience of tech stocks, they can remain informed participants in what could indeed prove to be a pivotal moment for wealth creation. If you enjoyed this article, please hit the like button, share it with your network, and subscribe to Billion Dollar Billionaire to stay updated on the latest in financial insights and investment opportunities. Your engagement makes a difference in growing our community of informed investors.